Hey folks, Dan Frio here, the Mortgage Update. Today is March 6th, 2020. So let's get at it. It was a crazy week, and if you watch me every day, you're going to know that. But the wild thing is, you're going to see here in a second, MBS markets continue to rally and rally strong, but it's not really changing rates at all. Some lenders actually raised rates, and I'm going to give you kind of some insight on that right now. Nope. I'll put that at the end. So let's just go through this piece. Finally, we're getting a lot of younger or millennials buying houses. And the market is going bonkers right now because of rates. And a lot of people are, the younger people are getting jobs. They're getting a little bit security there. They're finding it. They're renegotiating their student loans. That's coming down a little bit. Now they can afford to buy homes, or in a lot of areas, they're saying that, well, my rent's $1,500, $1,800, $2,000 in some areas. I can buy a house with a $1,500 house payment, and I know it's really not going to change, and I'm not at the mercy of my landlord. So that's what's going on. So let's see what happened today. Well, the bond market kind of is plunging, and you're going to see that with the 10-year treasuries as well as mortgage-backed securities. That is the bond that creates mortgage rates. So let's go to the all page that we see every day. That when you follow me, this number is fantastic. In a normal market, that number is crazy, and we'd be high-fiving everybody up and down the aisles and going out and screaming to homebuyers and homeowners saying, you got to do something. But the rally's been so good that nothing's really going on as these even continue to rally. And again, for those newbies on here, I'll explain this in a minute. But let's go over the news that came out today. The jobs report came out, and it was good. There was 177. Well, they expected 177,000 people to be added to payrolls, and it was much more than that. And it dropped the employment rate to 3.5, which is fantastic. The next piece of the puzzle is, look at this, the stock market off of that news. Now, normally on that news, you would see, okay, this is nuts. We went, probably 50% higher in employment than we thought, and the unemployment rate ticked down. The stock market would be rallying. Nope, it turned around and dropped almost 800 points. The good news is throughout the day, it rallied a little bit. We can see over here on the mortgage-backed securities market, we were at 25, up 25 at the time. We're up 36 at the end of the day. I'm going to show you a little bit of insight. Again, even not just my comments, I'm going to show you comments from other followers, other economists and people in the mortgage business, kind of, telling us exactly what I'm saying. Banks aren't really doing anything. They're not really reducing rates. That's our midday update. Then we go to the stock market was only now down 677. You saw the rally in the bonds for especially mortgage bonds go to up 39, and we ended up 36, which is great. So let's continue to watch. Now the Dow closed down 255. So a great recovery. Look at the recovery that we had from almost down 800 to now only down 255. That was a 500 point, turnaround. Not bad. So a lot of times when that happens, I'm thinking, did we hit a bottom? We hit that bottom when we bounced off of it. But the problem is the coronavirus is throwing us a curveball that we really never saw it. The last time we saw it was, SARS. And there was another virus or something that went around not too long ago as well that created havoc in the market. So let's go over to some of the newsletters that I follow and some of the things that I come out with on a daily basis. So it reiterates here what happened with the jobs market, which is great. We had, right here. 273 jobs were created. It was an estimate of 177,000 to be created. So that's 100,000 more that was created. Fantastic. Over here, talks about the stock market. Did terrible. But right here, look at this. Mortgage bonds set an all-time high. And again, I'll explain that in a second. But closes near the high set earlier in the week. So we didn't hit the ultimate high today. But this week, we did hit the highest pricing with mortgage-backed securities. And the price has an inverse relationship with rates. So that means we hit the lowest rates ever in history. Okay, and I'll Again, I'll explain that in a minute. Stay tuned, because at the end, I'm going to put all this together for you. They still had a big day, up 42, but as we cover in the updates, lenders are not giving better pricing. What we call pricing, you call rates. We're not giving any better rates because rates are as low as they can possibly be. Never seen them in my entire life with rates in the 2s and low 3s for 30-year fixed mortgages. That's nuts. You know, you talk to, and I've been doing this for 30 years. They were 12% back in those days, and they were even worse before that. But in the last, probably all the millennials out there, they really don't know rates any higher than maybe 5%. Well, now they're at 2%, or they're a little over 2. They're between 2 and 3%. I mean, that's absurd. So it's almost darn near free money, because don't forget, the interest that you pay on your mortgage is tax deductible. So let's say you pay a rate of 3, just say. By time you write off all the interest on your taxes, you can have, based on your tax bracket, you might have an effective rate, because you're writing off that interest, of, let's say, 2.5. Okay, so now let's spin that around. We've had financial advisors coming to us with clients. Now, high-end clients buying $2, $3, $4 million homes that we're going to pay cash. Now they're saying, why would I pay cash? I can throw that money in the market because the market's going to rebound. It will. It always does. So I'm going to take that extra money. Like one person today was going to buy a $4 million house. They decided, you know what? We're going to put down $1 million. They're going to pay cash for the whole thing. We're only going to put down $1 million. We're going to take that out of the 3. We're going to sit on the sideline until we think bottom has been hit, and then we're going to throw that money back in the market. They're probably in the long run going to get a 6, 8, 10% yield on that money. So if you can get 8% yield on your investments and pay an effective rate of 2.5, I mean, that's why their financial advisors are telling them, do this. So just a key out there for you guys out there. Let's go down through and absorb some of the other information. This talks about the jobs, hourly earnings. We're down 0.1, so nothing major there. There was no big retraction there that we are concerned with. And then next week, Consumer Price Index, which is the watch of inflation, is coming out. I don't think we're going to have any problems there because this virus is critiquing a lot of buying. So in the markets today, again, bond markets have plummeted along with the mortgage-backed securities markets. And the housing business is crazy, and the mortgage rates are crazy. So let me tie this together. My name is Dan Frio. I do the mortgage update every day on YouTube and on radio in Chicago. You can hear me if you're in Chicago on WYLL Radio. It's a Christian radio station. And I'm on there every night, Monday through Friday, from 7:30 to 8 o'clock. And you can hear me on WIND Radio, which is one of the biggest talk radio stations in the Chicagoland area, Saturday mornings from 7 to 8. And that's what I do. And I'm a mortgage advisor. Have been doing it for 32 years. What I've been asking people to do is 2 things. One, if you're in the process of getting a mortgage, please send me what's called your loan estimate. I think we got 11 today. And on those, I could beat, I think it was 8. I was able to beat rate and terms on all 8 of the 11. There was one gentleman that came out, and it was kind of a unique program. It was a medical loan for medical professionals like doctors and nurses and such. And he had a rate that was phenomenal. I got back with him and I said, you know what? The rate that you got at that bank, they must be doing something. You must either have an account there or whatever. It was a fantastic rate, fantastic charges. The costs were very low. I think it was a very small bank out in California that was doing it. And I'm like, you know what? Go with them. It's money. What you're trying to do is find the cheapest money you can. God bless you. You found it. And I was like, hey, thanks for giving me the opportunity just to look at it. That's all I'm asking. If you got a better terms from somebody else, take it. But at least get a secondary opinion. If you have a mortgage right now, especially FHA or VA that's 4% or higher, call. We're locking in most of those under 3. Yes, under 3. If you have a conventional loan, also probably 4, and then we'll just say 4 or higher, depending on the term. In a lot of those cases, we're able to do that as well. in getting you down into the low threes. What we're doing with a lot of people is, and I'm getting a lot of this coming back when people are asking me, Dan, my payment's not bad. What can we do term-wise? And in some of the cases, I'm cutting off 5, 6, 8 years on the mortgages. One person I was able to cut back, I think it was 7 or 8 years. They had, I forget what was left, but we went with a 15-year term, which they weren't even contemplating. Their payment was going to go up $80 from what they're paying now, and they were paying their house off 8 years early. And just think of it. So 8 years times 12 payments a year, 8 times 12 equals 8 times 12 equals 96 payments. I think it was like a $1,300 payment. So 96 times 1,300 equals $124,800 that they would save in interest. So I hate this word, no-brainer. But right now, a lot of this stuff is blatantly just no-brainer. So let me recap what we follow here on the channel. I follow the mortgage-backed securities markets. So do a lot of people in this business. Also, a lot of people do not follow this. They follow the 10-year Treasury. They think this is the instrument or the vehicle that creates mortgage rates. Don't know why they think that. And I was even watching YouTube videos last night, and people were saying, yep, you got to watch this. No, you do not. You can watch it, but it doesn't have any correlation with mortgage rates. It doesn't. This is MBS, mortgage-backed securities. That's the name of it. It's not the Treasury. So if somebody's watching this, hang up on them, because look at this. I mean, there's a disparity between the two. So that's the first thing. So let's see what happened with the trends. So what we watch here is this is the price of what you're paying for that bond. As you pay more for the bond, as you pay more means you're getting a less of a rate of return on that investment. The lower the rate of return, the lower the yield, the lower the interest rate that you're going to have to pay on that mortgage. So basically, as this rallies in price, rates are coming down. So flip this around basically is what you're looking at. Look at the rally that we've seen. And this is only in the last 2 weeks or so. This is unprecedented. So don't wait, because it's going to hit. And for those that follow me all the time, I think I might start getting my shirts, pigs get fat, hogs get slaughtered. We're going to eventually, this is going to turn, and it's probably going to turn pretty hard. And you're going to go from rates in the high 2s, low 3s, back to 4.5-ish range. That's where we really should be right now. So you can probably capitalize on a 1.5% reduction in rates by taking advantage now. I'm not trying to fearmonger you. It is what it is. So this is what we follow, the mortgage-backed securities market. And again, I kind of explained that. So there's been a run in the market. If I could be of any help to you, please reach out. Several ways to get me. Probably one of the best ways is email me. Email me your loan estimate. Email me your mortgage statement. I'll call you back and say, there's some little pieces of the puzzle I need to get from you. I'm not calling to hard sell you, hard pressure you. I can even do it via email. I'll say, here's what I need. Give me your, what you think your house value is. Give me what you think your credit score is. That's basically what I need. And I'll get back with you saying, if everything else fits, this is what I could do. If you have a current mortgage, send me your mortgage statement. And again, the same thing. Let me know right on there. And put down my house value is probably this, and my credit score is probably this. And that's what I'll base everything on. You're probably going to be pretty accurate. I'll do some research on the back end, on my end, to see what I can find on your house value as well, with the address on your mortgage statement. So email me at Danny, DANNY, .Frio, which is FRIO, at preferredrate.com. That's the first way. Second way, call me. 800 number. It's 844-775-LOAN. That's 844-775-5626. Or check out my website. It's down for the next few days, and when it comes back up, you're going to be amazed. It's revamped from the top to bottom. thefrioteam.com. So that's thefrioteam.com. That's the best way to reach out to me. But the first two, email me and call me, because the website's down for a couple days, a whole revamping. I always tell people to Google me. Google the mortgage update with Dan Frio. I hope you like what you see. If you don't don't call me. But you should. There's probably 6 or 7 pages on there. You're going to see my Google reviews, my Yelp reviews, my Zillow reviews, all my podcasts, all my radio shows, all my YouTubes, Facebook, LinkedIn, everything about me is on there. I got nothing to hide. So God bless. That's it for today. I hope I didn't miss anything. If you need me, reach out. I'm here for you. But have a great weekend, and I'll see you on Monday. Take care. Bye-bye.